Three powerful forces are hitting Tesla all at once: a slowdown in Europe and China, a fierce debate over Elon Musk's historic compensation package, and a shareholder vote that could shape the company's future for the next decade. At first glance, these headlines feel heavy. We're already hearing people say things like, "Is Tesla done?" But I believe the opposite. I believe this moment marks the beginning of Tesla's second chapter, not the end of the first. Hi, this is Ken. Today, we are going to break down what is happening behind the scenes, why the numbers look the way they do, and why this point in time might be remembered as the moment before Tesla accelerates again. Let's start by laying out the facts as they are. In Europe, Tesla deliveries in major markets dropped close to 36% year over year in October. Northern Europe, Germany, and the Netherlands saw the sharpest declines. France was the exception thanks to incentives, but overall, the momentum clearly softened. Meanwhile, in China, Tesla sales fell around 9.9% year over year in October. Month over month, the decline was even more dramatic, over 30%. Competition has intensified, government incentives continue to shift, and price alone is no longer enough to dominate. And then we have the compensation debate. Elon Musk's pay package, valued at up to roughly $1 trillion, has sparked global reactions. Norway's sovereign wealth fund and several other major institutional investors have publicly opposed the plan, arguing concerns around governance and scale. This is not a simple disagreement. It is a high-stakes negotiation about vision, leadership, and the future of one of the most consequential companies in the world. Put together, the picture can feel like turbulence. But surface turbulence is not the same as structural weakness. To understand what is really happening, we need to zoom out and look at the long-term forces at play. First, the EV market has entered its maturity phase. In the early stage, Tesla led with technology, brand, and sheer momentum. Early adopters do not compare everything, they choose vision. But once adoption spreads, the consumer mindset changes. People begin asking practical questions. How far will it drive? How fast can I charge? What is the service network like? How good is the resale value? This is healthy. It means EVs are becoming mainstream. And when a category matures, competition increases. That does not mean the pioneer loses. It means the game changes. Second, let's talk about the Elon Musk compensation debate. Many headlines frame this as a simple question. Is it too much money? But the real question is, how do you value the architect of the company's future? Tesla is not an ordinary automaker. It is simultaneously a robotics company, an AI company, an energy company, and a manufacturer building the factory of the future. Much of that vision still lives inside one person's head. Imagine Apple without Steve Jobs in 2008, just before the iPhone scaled. Imagine SpaceX without Elon Musk right before Falcon 9 reuse. Leadership does not just execute plans, it creates them. This vote is not about salary. It is about whether shareholders are willing to lock in mission leadership for the next chapter. Third, the market's time horizon is very different from Tesla's time horizon. The market trades on months. Tesla is building for decades. FSD is improving rapidly. Energy storage is scaling and moving toward recurring revenue models. And Optimus is quietly learning tasks inside Tesla factories. None of this fits neatly into a quarterly report. Technological compounding is invisible until suddenly it is undeniable. We are in that invisible window right now. So where are we heading from here? Step 1. Demand volatility will continue. We will see price adjustments, product refreshes, and strategic marketing expansion. This is not weakness, it is strategy. Tesla has pricing flexibility because it has scale, vertical integration, and software leverage. Other automakers do not have those tools. Step 2. FSD monetization begins. We all imagine the moment a robotaxi fleet suddenly replaces human drivers, but before that, we will see staged commercial rollout, limited area deployments, commercial fleets, corporate partnerships, delivery networks, rideshare integrations. This is a ramp, not a switch, and once recurring software revenue begins flowing through the Tesla fleet, the market will need to rethink how it values the company entirely. Step 3. Optimus and factory automation start to show economic impact. The world's labor markets are tightening. Every country is facing rising costs and shrinking working-age populations. A functional, scalable humanoid worker is not science fiction. It is a macroeconomic necessity. Tesla is training Optimus in real-world production environments today. That is the single strongest competitive position any robotics company could have. The next S-curve is not a car. It is intelligence applied to labor. My personal view is simple. This period will be remembered as Tesla's transition phase, not decline, transformation. Short-term data will continue to look uneven. Sentiment will swing. The media will amplify fear. That is what happens when old expectations collide with new realities. But technology curves do not care about headlines. They care about execution, iteration, and data. Chapter 1 was electric mobility. Chapter 2 is autonomous systems and robotics. And right now, we are standing in the doorway between those chapters. I expect volatility, but I also expect that once FSD and Optimus gain commercial traction, the valuation conversation will fundamentally change, and many will say it was obvious in hindsight. So here is the question: is Elon Musk's compensation package a governance risk or a strategic bet on the creator of Tesla's future? Do you believe the market is currently mispricing Tesla's long-term position in AI and robotics? And most importantly, which platform do you think will define Tesla more over the next decade, FSD or Optimus? Let me know your thoughts in the comments. The value of this community is that we think beyond headlines and we think beyond the quarter. Today, Tesla stock is trading lower, reacting to these three major storylines. It makes sense. Markets respond to uncertainty before they respond to potential. But remember, market bottoms rarely feel exciting. They feel uncomfortable. They feel debated. They feel exactly like this. As always, if you found value in today's analysis, please drop a like and subscribe. I post daily insights so you can stay ahead of the curve in Tesla, AI, and the future of intelligent energy. Thank you for watching. Let's continue living the future one day at a time, and I will see you in the next video. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home, I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.